Well, all right, first let me say this. We see raging inflation, and what we also see are central banks doing this, not really raising
Right.
rates, just
Yeah.
saying, well, they're gonna. And then, boy, we're gonna come in hard and we're gonna raise them, a half a percentage point. That will not do anything to the inflation because you're still ending up with a negative real yield, right? So, but the markets are actually way more powerful than the Fed. And we've seen how central banks, they call pivot from one policy to the complete opposite because the markets have a temper tantrum. And you see, it's so critical to keep these markets elevated, whether it's stocks or the bonds, which is what the interest rates are, or and the real estate markets, because that's what people pay attention to and makes them feel rich or makes them feel poor. So, I'm paying more than $4 a gallon to put gas in my car. Fortunately, it's a hybrid, so I've got some electric in there too. But still, I can afford the $4. It's not going to make a difference whether or not I am able to, feed myself or my family. But unfortunately, there are a lot of people out there that that's going to make a huge difference too. So as much as they can keep things hidden so that you stay static and status quo, and you look at the markets and you go, oh, well, all right, they're choppy. This is a buying opportunity because we've been trained that when it dips, so when you ask me about interest rates and the possibility of them going up, I would say that I don't really see a central banker willing to raise the interest rates at that level, but I can see the markets pushing interest rates up to there and beyond because the markets are big enough to overwhelm the efforts of the central banks. I have to say that the strategy that we execute is based upon repeatable patterns because history does have a tendency to repeat itself. And even though I can't guarantee tomorrow, the reality is if something has happened the same way every time and we're basically doing the same thing, we are most likely to get the same kind of outcome. So I know of no other company that's actually executing a strategy. How much gold? People always say, well, how much gold do I need? How much silver do I need?
Right.
Okay, well, we have formulas, again, just based upon history, that can tell you how much cash you need, which is your first line of defense, how much silver you need, which for me is basically about barterability, and, and everybody is different. I think that this mess is going to really last for, well, I would say at least 10 years. So I built my personal strategy to have enough barterability for myself and my children for 10 years. And then how much gold do I need? Because gold is really about making sure that you can always pay your property taxes, which is
Right.
one big risk that real estate runs. The other risk that real estate runs is in the changing, and we're all facing this risk as we're changing interest rate benchmarks going into 2023. But you want to be in a position, as we saw in 2008, where if things get dicey and you need to pay off that mortgage, that you can do it in a heartbeat. I know a lot of people believe in a lot of leverage, and I'm not one of those. I'm not one of those. I believe that I think leverage is fine as long as you have the ability to, bam, pay it off when you decide that you want to pay it off. And then finally, how to get into a position to take advantage of what's happening. Because wealth never disappears, it just shifts location. So the goal becomes, how do you have that wealth shift your way? And you have to maintain your purchasing power in order to buy those income producing or other assets that you might want when they are at bargain levels, which right now they're not.
Yeah,
But
absolutely.
gold is, and silver is. So that's really what makes us different. This is really it's I can't say a lifetime, but it is really a relationship that we have with our clients, our family, that lasts, you know, for as long as you want it to last, and definitely through this trend cycle. Because anybody can put you into gold and silver. That
Right.
doesn't take rocket science. But what do you do with it and when do you do it? That's what we help you create a plan around based on your goals. And then that's what my work on the channel is about. Because I tell you what I'm doing when I'm doing it. The real trend that people need to pay attention to is what's happening with the purchasing power. So if what you're holding can only be converted into that fiat money, the dollars, the euros, wherever you are in the world, can only be converted into that, then that's the real trend that you need to be paying attention to. Because
Right.
one thing that is a guarantee, and I can't give you many, but this one I can absolutely give you. All assets at some point go to their fundamental value. And that is the real value that they were created to perform. So that's a little challenging for a lot of people to understand. But fiat money was really created with inflation built into it, to rob you of your purchasing power over time and go to zero. That's the intrinsic value of a fiat money currency. In my opinion, the most important function, and gold performs, and so does silver, but gold performs a lot of different functions. The single most important function that it performs is in the financial area, where it has no counterparty risk and it protects you from inflation. So I can sit here and tell you that at 1,900, at 10,000, at 20,000 an ounce, severely undervalued. Because if they were going to reset the currency today, the way they do that is against gold. And you would see gold north of $50,000 an ounce, which I get sounds outrageous because it's suppressed, but that's what you're talking about. This and this, gold and silver, are the only bargains that I see out there. And it is a gift. And we should all be taking huge advantage of this while we can, because no counterparty risk, no political risk.